Welcome to the deep dive. We cut through the noise, getting straight to the knowledge you need to be truly well-informed. Today, we're tackling something pretty fundamental, the right to a home. Now, getting a home loan, historically, it's been, well, challenging for many, sometimes downright unfair. So the big question is, how do we actually ensure fairness? Real equality, especially for something as vital as having a roof over your head.
That's exactly the territory we're exploring today.
We're doing a deep dive into the Home Loan and Mortgage Disclosure Act. That's Act 63 of 2000. Its main goal, really, it's championing fair lending. But how? By demanding serious transparency and disclosure from banks and other financial institutions.
Think of it as maybe a shield for home buyers, but also a mirror for the lenders themselves.
Right. So our mission today for you listening, whether you're, dreaming of that first house or maybe you're deep in law books figuring out financial rules, is to get not just what the act says, but why it matters so much, why it's a potential game changer. We'll look at where it comes from, those constitutional roots. We'll break down exactly what information banks have to share. We'll also look at the special Office of Disclosure set up to, well, keep an eye on things. And really importantly, what happens if institutions don't play by the rules? So let's jump in.
It really is quite something, this act, because it connects these big, sometimes abstract constitutional ideas to the very real, very practical process of trying to get a mortgage.
Absolutely. Okay, let's unpack that connection. You said constitutional roots. This wasn't just dreamed up overnight then. What's the why? What constitutional principles does it really lean on?
It leans heavily on some core principles. You look at the Act's preamble, its introduction, and it points straight to several key rights. First up, Section 9, equality.
Okay.
This is fundamental. Everyone's equal before the law, deserves equal protection, and you can't unfairly discriminate based on race, gender, social background, that sort of thing. And let's be honest, historically, discrimination in home loans was a serious problem, a stark reality. This act was built to tackle that head on.
So it's acknowledging that past and trying to fix it.
Exactly. It's saying, look, we know this happened, and here's a mechanism to try and stop it. Then you've got Section 26, access to adequate housing.
Right, the housing right itself.
Yes, and it's not just a nice idea. It puts a duty on the state to actually do things through laws to make housing more accessible over time. So this act, it's a direct legislative step fulfilling that duty.
Makes sense.
And the third pillar, maybe the most direct one for Disclosure Act, is Section 32(1), access to information.
Ah, the right to know.
Precisely. Your right to information held by the government or, crucially here, by others like banks, if you need that info to exercise or protect your rights. This gives the Act its legal muscle to demand that banks open up their books, so to speak, on lending data.
So it's like a three-pronged approach. Fight discrimination, boost housing access, and give people the information they need to make those first two things happen.
That's a good way to put it.
And it fits into the bigger picture too, right? It's not working alone.
You mentioned the Housing Act of '97? Exactly. It slots right in. The Housing Act aims for an effective, fair housing market. This Disclosure Act supports that directly. They work together to push for fair access and stop unfair discrimination across the whole housing sector.
Okay.
But there's a really interesting balance here. The Act is all about disclosure and fairness. Yes, but it specifically states it doesn't want to encourage unsound lending practices.
Ah, that's important.
Very. It's about opening doors fairly, not about forcing banks to make risky loans. That distinction is vital. You need fairness, but you also need a stable financial system.
That's a critical nuance. So it's ensuring good loan applications aren't unfairly rejected rather than pushing bad loans through. Okay, now for anyone thinking about a loan, or maybe you're studying regulation, this is where it gets really interesting. What exactly do these financial institutions have to tell us? Before we get into the data itself, maybe just clarify some key terms, like who counts as a financial institution here?
Good point. Definitions matter.
Yeah.
So a financial institution under this act, we're mainly talking about banks, mutual banks, registered deposit takers, or institutions whose business involves giving credit specifically for home loans secured by property.
Got it.
A home loan is pretty much what you'd expect. A loan from one of these places to build, buy, fix up, or improve a home. And it has to be secured usually by a mortgage bond.
Okay.
A home is basically the house or structure itself, the thing used as collateral. And the borrower is simply the person who owes the money for the loan. It's fairly straightforward when you break it down.
Right. Those definitions help frame it. So now we know who's involved and what kind of loan we're talking about. The big question, what information are these banks actually forced to put out there?
Okay, so every financial institution covered by the Act, starting back in July 2007 when it kicked in, has to disclose specific required information. And this isn't buried somewhere deep in their annual reports. It has to be in their yearly financial statements under its own very clear heading. Disclosure requirements in terms of Home Loan and Mortgage Disclosure Act.
So it's prominent. You can't miss it.
Supposedly, yes. And here's a key bit for accountability. The auditors, the independent folks who check the institution's finances.
Yeah.
They have to specifically comment on whether this disclosed information is accurate, if it's complete, and if the institution followed the Act properly.
Oh, wow. So it's not just the bank saying, here's our data. There's an external check.
Exactly. It adds a layer of verification. It means someone else is looking over their shoulder, making sure the numbers are real and the rules were followed.
That feels like a pretty strong safeguard. So what are these specific data points? What actually goes into this public disclosure?
This is where you really see the potential power of transparency. Institutions have to disclose the total number and the total RAND amount of all the completed home loan applications they received in that financial year.
Okay. The total number received.
Yes. And they have to break this down by prescribed categories of borrowers, like demographics, income levels perhaps, and also by geographic areas.
Interesting.
But here's maybe the most crucial part. They also have to disclose the total number and RAND amount of applications they declined.
Declined, right.
And this is key, the reasons for rejection. Again, broken down by the same categories of potential borrowers in geographic areas.
Wow. The reasons for rejection broken down like that? That sounds like, well, a potential bombshell if you see patterns there.
Precisely. That's where you could potentially spot discriminatory patterns that might otherwise stay hidden. Are certain groups or areas seeing way more rejections for, say, reasons that seem flimsy? This data forces that question out into the open.
It's like giving us a diagnostic tool for systemic bias.
That's a good way to think about it. Beyond the rejections, they also have to report the total number and value of all loans that were actually closed and paid out.
Okay.
And the total number and value of all loans approved during the year, again, by those same categories. The Act also cleverly leaves room to require other information through regulations later, so it can adapt.
Flexible. Good.
And one more thing, they have to show this data for both the current year and the previous year.
For comparison, so you can see trends.
Exactly. Are things getting better, worse, staying the same? That comparison is vital. But it's also important to remember, while it's about transparency, there are rules. This information can generally only be disclosed according to this Act or other laws or a court order. So there are checks on just spraying data everywhere.
Understood.
Yeah.
So that's a huge amount of data flowing out. But who actually gathers it all up, makes sense of it, and tells the public what it means? Because just raw numbers aren't always helpful, are they? You mentioned an office.
Yes. The Act establishes the Office of Disclosure. Think of it as the central hub, the watchdog, specifically for this Act.
Watchdog. Okay, what does it actually do?
Its main job is to receive all this information from the financial institutions, then analyze it, interpret it, figure out what it's telling us. But it goes further. It's tasked with looking into public comments about how banks are handling home loans.
So it listens to the public, too.
It's supposed to, yes. And then a really interesting function. It has to make information available to the public about whether banks are actually meeting the housing credit needs of the communities they serve.
How does it do that?
It can even publicly rate the institutions based on its findings.
Wait, it can rate the banks?
Yeah.
Like give them a score on how well they're serving community?
That's what the Act empowers it to do, yes.
That's fascinating. I mean, a public rating? That could actually influence behavior, couldn't it? Beyond just a fine.
Absolutely. Imagine being a bank with a poor public rating on community housing finance. That's bad for reputation, potentially bad for business. It creates a strong incentive to do better.
Definitely. What else does the office do?
Well, it actively helps identify those potential discriminatory lending patterns we talked about. And it assists other regulators in enforcing anti-discrimination laws like the Promotion of Equality Act. It also reports every year to the Minister of Housing. This report includes a performance breakdown for each institution and recommendations for improvement or action.
So it advises the government, too?
Yes. And crucially, it has enforcement powers. The office must ensure institutions comply. If it doubts the accuracy of the data provided, it can demand proof, investigate further, even initiate proceedings to verify the information. It gets full access to premises and records if needed.
So it really does have teeth. It's not just collecting reports.
It's designed to have teeth, yes.
Okay. And who sits on this office? What kind of people make up this watchdog?
It's made up of up to 10 members, appointed by the Minister of Housing. And they're specifically chosen for their diverse expertise.
Like what?
Things like banking, obviously,
Yeah.
housing finance, investment strategy, but also community economics and civil rights law.
Ah, so it's a mix, not just finance people.
Exactly. It brings different perspectives to the table: financial, social, legal. There's a chairperson, a deputy, rules for meetings like needing more than half the members present for a quorum, and decisions are made by consensus or majority vote. Importantly, members have to declare any potential conflicts of interest.
That all sounds quite thorough, designed for integrity. And how is it funded and supported day to day?
Right, the practicalities.
Yeah.
Members who aren't already full-time state employees get paid for their work on the office. The actual administrative support, the secretariat, comes from the Department of Housing, and the Director General of Housing is the accounting officer, handling the finances responsibly. It's essentially funded through the department's budget, approved by Parliament.
Okay, got it. So let's pull this all together now. We've talked about the why, the what, the who's watching. What does all this mean in the real world for you listening? What are the practical implications if you're trying to buy a house? Or maybe if you're that law student trying to understand financial regulation?
For borrowers,
Yeah.
for individuals, the impact is potentially huge. All this transparency. It means you get a much clearer picture of how lenders operate. It gives you grounds to potentially identify and challenge unfair treatment or discrimination. And those public ratings we talked about,
Yeah.
they become a tool for you. You can actually look up how a bank is rated on serving community housing needs. That helps you choose where to even apply for a loan. It shifts a bit of the power back to the consumer.
That makes a lot of sense. And for the banks themselves, the financial institutions.
For them, it creates a clear, standard way they all have to report. That encourages, or maybe forces, a culture of accountability. It definitely incentivizes fairer lending practices because nobody wants those bad public ratings or penalties. And the act was practical too. It included an exemption clause.
Oh, what did that do?
It allowed the minister to grant institutions up to a year, max, to get their systems ready. It acknowledged that setting up this kind of detailed reporting takes time, without letting them off the hook entirely.
Oh, sort of grace period.
Sort of, yes. And for regulators, policymakers, law students, this act is gold dust, really.
How so?
It's a powerful tool to monitor the whole housing finance market, to spot systemic problems, to actually enforce anti-discrimination laws with real data backing it up. The sheer detail of the required disclosures provides incredibly rich data for analysis, for research, for shaping future policy. It lets you see under the hood of the market.
It sounds like it creates this whole ecosystem of transparency and accountability. You mentioned teeth earlier. What actually happens if a bank just ignores this, fails to disclose properly?
Well, yeah, it definitely has teeth. Section 15 lays out offenses and penalties. Any contravention, any failure to comply with the act, that's an offense.
And the penalty.
If found guilty, the institution can be fined up to $100,000. Now, that might not sound like a fortune to a huge bank, but it's significant, especially combined with the reputational damage and regulatory scrutiny that comes with noncompliance. It sends a clear message.
Right. It's not just the money.
Exactly. Plus, the act isn't frozen in time. The minister has the power, after talking with the Minister of Finance and the Governor of the Reserve Bank, to make new regulations.
So it can evolve.
Yes, it can adapt to new market conditions or maybe tweak the disclosure requirements if needed. It's designed to stay relevant.
This deep dive really highlights how one specific law, the Home Loan and Mortgage Disclosure Act, connects directly back to those fundamental constitutional rights we started with: equality, access to housing, access to information, and how it can have a real, tangible impact on people's lives. It feels like it laid a really crucial foundation for trying to make home loan lending fairer, more transparent, turning what was maybe a black box into something clearer.
I think that's right. Disclosure acts like this are incredibly important. They empower people, ordinary citizens, with information, and they hold powerful institutions accountable, not just legally, but also to those bigger constitutional ideals of fairness and equal access.
It really drives home the point. And maybe a final thought for everyone listening. We've seen how this act uses information access as a tool for equality in housing finance. It makes you wonder, what other parts of our financial lives could benefit from this kind of radical transparency? Where else could shining a bright light help level the playing field for everyone? Something to think about. Thank you for joining us on The Deep Dive. We'll see you next time.